We've got Andy Brown, Chief Financial Officer at Chegg, here with us back on the show. Andy, once again, you guys are putting up big growth numbers and you're looking at big development, as you've talked with us about, in the post-COVID world. So let's start there with the update. Walk me through what's coming next from Chegg.
Well, you're absolutely right. We had a fabulous quarter, as you know. We saw, our revenues grow 51%, our EBITDA margin grow 80%. So we're seeing some really great leverage in the model. And we expect that to continue for the foreseeable future. I think one of the things that is unique about Chegg, and I've been at many companies in the past, is that the cost of acquiring customers is very low. More than 85% of our customers are actually unpaid. They'll come through unpaid sources. And the content that we have developed over years and years and years, it's write once, use many times. And now as we expand globally, that content is once again being leveraged. And as a result, you're continuing to see increased margins and leverage in the business.
I also see that your cash flow keeps on going up too. And even though it seems like the revenue growth you're expecting to slow over the next couple quarters, walk me through what's expected there and then what will be sustainable. When you're doing 60% and 50% revenue growth the last 3 quarters, I see analysts expect that to drop more towards 20 to 20-ish over the year-over-year basis the next couple quarters. How much of that is typical seasonality and how much of that is people going back into classes?
Well, actually, going back into classes really doesn't impact that, because if what we've seen with our students, whether or not they are actually learning, from home online, or whether they are in fact in person, they still need that help. They need the help to do that. What we are seeing, however, in the business is really a couple of things. We have been significantly benefited over the last couple of years. One is, and I think we talked about this last time, is we implemented some technologies last year to help reduce account sharing in the U.S. But where on the flip side is we've also seen a very large infusion of international customers onto our platform, and part of that clearly is a result of COVID. As international customers went online, they look for help online, and they see that they've chosen Chegg. And one of the things we talked about on the last call in February was that we expected more than 1 million subscribers to come from international sources. That took a few people back by surprise. It would be that bold. But the fact of the matter is we're on track to meet that goal. We do believe that we will see at least 1 million subscribers from international students.
And where will that bring the international revenue as a % of total revenue if you do hit that number?
Yeah, so we know if we do get to a point where international revenues are greater than 10%, we have to report that out. And certainly, as we get through this year, it's likely that we will exceed that, and internationally is likely to be 10% or greater of our consolidated net revenues.
Got it. Okay, I was wondering because I was looking at some of the numbers and I didn't see that reported yet, but that answers the question. And so, Andy, in terms of some of the skills that you've talked with us about before that Chegg offers for adults as well, not just kids in schools, but thinking about the economy coming back online and thinking about how folks want to plug into different industries, what should we expect to see in terms of that kind of interplay with the economy? Are we going to see Chegg ads and marketing around? Are you going to want to spend to make people aware that they can learn new skill sets and learn new tools as more jobs start to reopen? Because right now there's a lot of places that are hiring and they can't find people to hire.
Well, yes. I mean, one of the areas where we are expanding into is in the skills area, to your point. So if you think about historical Chegg and really where most of our revenues come from today, it's academic learning. But one of the areas where we believe there's massive growth for us over the next several years is actually in the skills area. We kind of tipped our toe in the skills area about 1.5 years ago with an acquisition of a company called Thinkful, which really provide what I'll call those long-form courses. But we anticipate that over the next several years, we'll expand beyond that, and that skills, along with international, will be big areas of growth for us for several years to come.
Okay. And thinking about either combinations with other services? As you mentioned, you've done some of these in the past. Do you see any of that as presenting itself for businesses that were more specifically online and maybe COVID-centric? Because I know a lot of the messaging and the numbers that are in the guidance are putting Chegg in this category as a, not just a COVID play, not just a quarantine play. Are there businesses you see that are more specifically exposed now that might integrate well into your own business as we get back to normal?
Well, clearly, we're not a COVID play. I mean, a big part of our success has really been what we're doing as a business around, particularly in the U.S., around account sharing. Having said that, we do believe that as we look out over the next several years, the skills area is of particular interest to us. We have one asset today. We do believe, and as you can see from our balance sheet, we've got a very strong balance sheet with about $2.6 billion of cash. We do want to deploy that for whether it be organic growth or whether that be inorganic growth. And we can imagine over a period of time that, in fact, we would add more to our skills portfolio because our goal is to be a major player in the skills space, just like we are in the academic space.